receipts tax, we can explain this relatively quickly by saying it's just a tax on the total revenue of the business. I'm a lawyer, I have my own law firm. Let's say my gross revenue in a year is $1 million. And let's say 900,000 of that is paid out in salaries and overhead, rent and legal research and furniture and stuff like that. I walk home at the end of the year with $100,000 in revenue from my company. The gross receipts tax doesn't care about that revenue. It just says we're going to impose a relatively small percentage tax on the gross receipts of your company. That's the nature of the gross receipts tax. We don't have one in Utah. There aren't a lot of states that do. Do you know, Dr. Young, how many states do? 5?
No, 5 have a portion, 1 has a total gross receipts.
Okay.
We went down that path in last year.
Right. It's an idea. And a lot of people like it. I'll tell you the thing I like about it. I don't like it from this perspective that it would hit me as a small business owner hard, but here's one thing I like about it. It's relatively easy to calculate and relatively easy to impose. And it's relatively small in terms of the percentage. If you're talking about businesses with skinny margins, it's also relatively burdensome. Impacted would be businesses and consumers because they're just going to pass those costs on to their consumers. I mean, from my perspective as legal services, almost all my work is done on a contingent fee basis, a percentage of anything I collect. I'd look at that and say, okay, I got to increase the percentage of my, the contingent fee percentage to cover that.